Welcome to Markets Now. I'm Michelle Rook with Oliver Sloup, Blue Line Futures. Mixed closes in both grain and livestock futures trade on Wednesday. Well, Oliver, let's start off in the grains, lower except for the corn market. You know, we didn't expect a lot of revisions from USDA out of the June WASDE, but boy, we didn't really get anything in that market or in that report, did we?
You know, people always refer to the USDA kind of punting or kicking down the road, and I think today's report was really just a perfect example of that. But I mean, those were kind of the expectations, at least from our camp going into this report, that we'll trade this report for a few minutes and then it's on to the next one, which is historically a more significant report for the market, that being on the 28th. Is the quarterly report, and that usually has a little bit more data packed in it. But as you had mentioned, higher close for corn, I thought that was pretty darn encouraging, and was kind of telling guys, I think no new news in the corn market, no new bearish news, I guess, at the very least, is actually good news. Big report at the end of the month, a lot of uncertainty around what we're going to be able to produce from the crop that just got put in the ground. And I wouldn't be surprised to see that maybe spur a little bit of short covering here in the next couple of weeks. But from the seasonality aspect of it, if we do get a little bit of push higher into the end of the quarter, I think probably that entices producers to be a little bit more active on the sell side. There's some big resistance from 472 to 475 in that December contract. That represents kind of the top end of the range from the last 2 weeks, the 50-day moving average, and then the 50% retracement, which is basically kind of the middle of the range from the end of May sell-off.
So soybeans, we didn't see really much demand adjustment in the report, with the exception of crush, just a 10 million bushel cut there. But, do you think that USDA will have to make revisions going down the road, because exports are pacing behind normal or behind last year, aren't they?
Yeah, the exports and demand has really been a dark cloud over the soybean market. We have gotten a couple very small silver linings at that over the last couple of days, back flash sales from China, which is nice to see. But we've got to see bigger numbers and more consistent numbers to make up for that. And seasonally, this is a time of year where we can start to see demand improve. I think one of my concerns going forward is that this is an important election year, and going into an election, you're going to have debates and you're going to have headlines and a lot of hot air going back and forth with regards to trade with China and potential tariffs. And with that in mind, I don't know that I would expect China to be coming back in a significant, meaningful way ahead of all that uncertainty. So I think I continue to be a little bit less optimistic on the soybean market, especially relative to corn and wheat here going into the back half of the year.
Yeah. And wheat, like I said, has had a downward spiral from the highs that we put in just a couple weeks ago. Has that all been harvest pressure? I mean, is that Russian story and concerns there, is that over with?
For now, I guess it seems so. Wheat it's a perfect example of what wheat can do really over the last month, where you get basically an uninterrupted move up and an uninterrupted move down. It gives little pause in between and not a whole lot of opportunity or second chances either to get in or to get out. So managing risk in wheat is certainly paramount. Now, from a hedger's perspective, I hope people were pretty active when we got the big move to the upside and didn't get those big eyes and get a little bit greedy, wanting a little bit more. I always tell guys, and keep it in mind for any market, not just wheat, but a good price isn't always necessarily the best price. If you've got a good price in front of you, there are certainly ways to protect the downside and capture that. So I would like to think that people were doing that. And that's probably maybe what caused a little bit of the pressure that we've seen as of late, aside from just long liquidation from people that caught the move up.
Yeah. Are the funds back going short in all of the grain markets, but even wheat?
Yeah, they're net short about 36,000 futures and options contracts. That's well off of where they were back in April. They were net short about 100,000 futures and options contracts. So it certainly seems like the funds are getting back in on the short side. I'm a little bit more cautious again on the soybeans. Funds were basically flat 2 weeks ago. Last week, they were net short about 40,000 contracts. Their largest net short position earlier in the year, back in March, was about 160,000 contracts. So that's about 120,000 contracts more than where we're at right now. And my concern is that if we don't get a change in the fundamental story to prop prices up. What if funds return back to that 160,000 net short position in the soybean market? What would that look like? Well, if you look at it kind of where we were back in March relative to fund positioning and price action, that could be $1 plus lower from these prices. So again, it's all about being proactive this time of year, working with producers.
Yeah. So what's your take on weather and the threat of the extended forecast looking like we're going to turn hotter and drier?
Well, the hotter and drier forecasts, I've seen that making the rounds, and I always take it with a little bit of a grain of salt, especially this time of year. We are halfway through June, which is just mind-boggling that this year is going by so fast. But you get hotter and drier temperatures into the summer months. I think there potentially is some concern with regards to corn and soybeans, as we did have a wet spring, and you throw a lot of hotter and drier temperatures on top of that can have some negative side effects, and potentially that's what sparks a little bit of a short covering rally here into the end of the month, into the quarter. But I can't harp on it enough. I think those will be opportunities for producers to be more active.
Cattle market, disappointing close again here today. What is holding that market back at this point? Do you think it's, just the bird flu headlines that we get, or what's going on?
Yeah, the bird flu headlines have just been lingering around for a while. We kind of thought that was behind us, and then last week we got hit with a slew of headlines, and that didn't do us any favors. We drifted lower for I think 7 consecutive sessions, but we didn't get really any new news over the weekend, and so we came out of the gates really strong to start the week. Just an incredible rally on Monday. And I was like, all right, the rally's on. This seasonally, this is a strong time of year for cattle. The grilling season is pretty friendly to the market. Maybe we can get some follow through, get some more fun participation into this market and kind of retest some of the old highs. But the last 2 days, we just weren't able to get any follow through. So I'm optimistic on cattle, but I'd be lying if I said the last 2 days weren't disappointing. Funds right now, they're net long about 56,000 futures and options contracts. That's a relatively neutral position. And I think that these headlines are just the risk of headlines is maybe keeping some of these would-be buyers at bay during a time of year, which is seasonally friendly. But if we can get past the bird flu headlines, get some more fun participation in these markets, I really think that we could see August retest the upper end of the recent range near 180 and maybe chew through that and make our way towards 182.
Yeah, it was especially disappointing when you consider we had pretty strong cash. We were seeing the futures at a discount to cash, and then CPI showed that inflation was cooling off here a bit.
Yeah, we had a CPI number this morning, which came in, softer than expectations pretty much across the board. And if you looked at, any quote board with commodities, you saw a nice move to the upside in pretty much everything. Indices, crude oil, gold, silver, even the grain saw a blip on the back of that number higher. And we weren't able to see that kind of carry over into the livestock market, which is certainly concerning, because if you would have saw the reverse and would have saw a hotter than expected CPI number, you probably would have saw a risk off trade in a lot of markets. And that probably would have been enough to put pressure on cattle. But unfortunately, a better number than expected. It was not enough to help cattle today. But again, still optimistic. Just got to chew through those headlines.
Hogs, Oliver, a little bit higher here today. We kind of just bounced off of more of these contract low areas, but do you think those are going to hold here? Can we start building on this?
I really think that we can. Looking at that July contract, 90 was really the low end of the range from the start of the year. And I think so long as we can defend that, we can start to carve out a low here. The sell-off over the last month and a half was on the back of funds holding their largest net long position since 2013. And so that kind of snowballed on itself. We went long from net long about 93,000 futures and options contracts to 6 consecutive weeks of selling by funds, now holding just a net long position of about 19,000 contracts. So the risk of long liquidation has evaporated. We're down near the low end of the range. So from a trader's perspective and a risk reward perspective, I think there's room to the upside. Potentially we retest 90, but I think that holds. So you're potentially risking $2 to the downside, where I think the opportunity, the upside really comes in from 96 to 98, which is where we broke down from last week. And if we can get out above there, I think we can maybe recover a little bit more ground.
Great. Appreciate your analysis, Oliver Sloup, Blue Line.